What should we be expecting the performance of US equities to be in the next few weeks as we run up to the US election on November 5th? My name's Ray Gilmour. I'm going to be taking a look through the charts, looking at the S&P 500 and also looking at what we can learn from previous elections in terms of how the market has moved around the date and just after. Starting here with the daily chart of the S&P 500. Lots of people very bullish in here. The structure is fantastic. You can see the nature. We had a correction going back through the summer, but we've rebounded and performed really well since. We broke to a new all-time high. A little bit of a pause, consolidated above that level, but we've continued and broke higher. So structure is absolutely fantastic in here. It does look very, very bullish. We do, however, have a rather nasty reversal candle just from yesterday's close. What does suggest we possibly could be looking at a retracement in here. But should we be looking for more than just a retracement? Can we expect an actual significant sell-off in here, or just a little consolidation and continuation just like we had previously? The consensus seems to be that we're going to have the latter. We're going to have a slight retracement, bit of a pause in through here, and then I see a continuation of this rally through year end. But we're going to take a look back over this last few election cycles and actually see a couple of surprises, particularly in the latter week of October, which has caught a lot of traders on the wrong side and then missed out on nice rallies thereafter. Particularly, let's just start on the chart from 2020, the last election. Whenever actually, if you look at the price action, it looks fairly similar to what we're seeing at the moment. We did see a sell-off prior to the rally just ahead of the election. We moved into October. We built a nice base in through here. We're breaking out similar type of price action that we just done. And structure was looking good. A lot of traders would have been anticipating just price action to come back in to retest previous resistance. And you can see we didn't have much of a sell-off initially. There wasn't much momentum in here. And a lot of traders were looking for a continuation from that point. But you actually see that wasn't the case. Buyers didn't come in. We've seen a significant sell-off back towards the lows. Once again, you can see in here the election was on the 3rd. We continued up thereafter. So similar to what we're just having at the moment, price action is certainly stronger. We're in a much stronger uptrend, but we are seeing a similar breakout. And a lot of traders, again, just expecting maybe a little retracement before we continue. But the issue with that is we do typically see a lot of weakness, particularly in the second half of October. Just based on the 2020, what we just looked at, if you go back and take a look at that again yourself, it was roughly around a 9% decline that we've seen from the high. So we do something similar to that again. We're actually pushing back towards previous lows in here again, similar to what we've seen in that example. Also, if we hop over onto our seasonal platform, we can look at the historical performance of all your favorite markets, whether it be stocks, indices, commodities, currencies. Let's take a look at the S&P 500, going back a lot further than just 2020. And if you look, obviously you can see the current year is the yellow line on here. We're performing very strong performance, pushing the new highs as we just seen from the previous chart. But I want to take a look at election years specifically. And on this panel, we can actually look at the performance of any year over this last 44 years. And this row here is the list of the election years that we're currently on. Obviously, the current election is 2024. We can go back and look through the performance. And that's what I want to do here now. So we're going to take this off, keep the current year on. And what I want to draw attention to is particularly the weakness in the second half of October. Back in 2020, again, there was a sell-off early September, very similar to what we'd done at the 2020 election. There was a little bit of a correction earlier in October. But the main issue which caught a lot of traders out is this part. The last week of October historically sees a lot of weakness around the election period. Again, if we take a look at 2016, very similar. Again, we've seen a similar sell-off in early September. And again, it's that period, it's that last part of October that tends to catch a lot of traders out. Starting off the 22nd of October, actually, I forgot to check the date on the 20th. In here again, it was actually around 22nd, 23rd of October, kicking in, go back into 2012. A lot more underperformance through this period. Actually, the weakness kicking in a little bit earlier. That's actually the 16th. But if you go back through the performance of how that market moved to 2012 compared to what we're doing now, again, timing of highs, very, very similar. There was that pause and that weakness. Obviously, the market direction in between was very, very similar. But a lot more significant sell-off from what we currently have at the moment. 2008 was obviously a very different year. The financial crisis and the market wasn't in line with what you would expect in a normal election cycle. Back into 2004, and again you can see a lot of sell-off, a lot of weakness in October. A lot of weakness through July that we just had. Again, that weakness through April also. But again, the key thing here is that weakness in October. We typically do see weakness that does come in a little bit earlier in through here. But we do historically see weakness in October and then the rally thereafter. Thing to be aware of is not to be getting too bullish too quickly, getting caught in a potential sell-off from current levels and then to miss out the eventual bounce. We take another one, 1996. A lot closer to the current structure, the current price action. 1996, we're pushing the new highs. Also very much a strong uptrend. But again, we've seen that retracement, seen that sell-off. Again, starting around the 18th. So we're approaching that period historically where we have seen a retracement in the market. And then the key thing is they have rebounded and performed well thereafter. So looking at the chart, there's a number of ways we can look at that. Yes, certainly the price action, we've seen that reversal candle coming in from yesterday. It's before the US Open at the moment. So it'll be interesting to see if we do get a follow through from yesterday's sell-off. But at this point in time, I would be expecting a retracement of sorts. I think it is possible. Also, we see something more significant. We could be looking for a break back towards the previous lows. If you look at previous price action, it doesn't take that long to do that. The key thing is what we can learn from the past is we generally do see that weakness in the second half of the month. So anticipate some weakness in through here. Looking for price to reach support levels and fantastic levels sitting here at 56.80. But don't rule out the possibility of getting down towards that 5400 area also. I'd be surprised if we broke that level, but I wouldn't be surprised if we actually did test that point. It would be a plan B at the moment. I think plan A is getting back towards sort of the 56.80 area before continuation, but don't rule out the possibility of this. One last thing to note is this purple line that I've drawn here in the middle. It's a very important line. This is based off the closing price on July the 31st. Where the market closes as of the 31st of October has a very high success rate in telling us who is actually going to win the election. If price remains above that level, then it suggests historically there's around an 82% success rate. The current president or party, obviously it's not going to be the current president. Mr. Biden has obviously stepped aside, but if it stays above that, the current party would stay in power. If it breaks below and closes below, there's a very strong precedent in terms of the market performance that the challenger actually comes in. So let's see how we perform over the next couple of weeks. To say, don't be surprised if we do see that decline to the downside and actually get below that level. A similar sell-off to what we've seen in 2020 would actually take us back down into this levels here, approaching this sort of an 8.59% decline. So certainly looking for and expecting some weakness. Let's see if we get some follow through from yesterday's selling from current levels. But make sure you have a plan. You don't want to get caught being too bullish too early. Because what will generally happen then is you'll not only get caught on the wrong side in the retracement, but you'll also then miss out on the beginning of the true genuine move, which typically comes towards the latter part of October or the very early stages of November. Hope you enjoyed that. By all means, jump onto the platform. You can take a look at the performance of any market, whether it happens to be stocks, indices, commodities, currencies. Look at how they perform during the election period. The key thing here, looking at the indices, certainly expect a little bit of weakness in through here, which could accelerate towards those lows that we've seen back in September.